So unless the market breaks while I am recording this episode, we are gonna have a green week this week. And I do believe that's super amazing for long-term investors. Even though I want to say long-term investors, we should have kind of that long-term mentality where this kind of week-to-week noise doesn't really affect us. At the end of the day, seeing red after red after red definitely plays a little bit of part in maybe the emotional side of investing or maybe the mental side of investing. So kind of seeing a green week can help us refresh that mentality and help us focus for the long term of things. So in today's episode, I want to focus more on mindset and 3 tips and tricks that have helped me during the downturn and the ones I'm going to continue to use as we progress in the market.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
The first tip and trick is very easy. Continue to invest in companies that I am bullish in. And this is very important, right? The great thing about investment is we all can be bullish in the market, but we can all be bullish in different companies. But I do believe the mindsets that we have can really kind of intertwine with our investment styles. So for me, I'm super bullish, for example, in a company like Unity. Unity a few months ago was sitting in the price points of $90, $100. If I was to invest about $500 a week, I would only be able to buy 5 shares. But now with stock prices down a nice amount, because I'm continuing to put my money to work, I invest on a weekly basis, I am able to buy now over 15 shares depending on where the price is at. Again, I do believe this tip and trick really helps those that are just starting off in their investing career, and maybe not so much on those that probably have numerous decades in the market. For example, for me, I've been investing for about 6, 7, maybe even 8 years now, and I do believe that I'm still in the accumulation phase of my portfolio. So for me, I secretly want some of my stocks to continue to go down so I can purchase more and have a nice portfolio size of these positions. Again, when we continue to see red, we might get discouraged on buying some stocks and we might believe that this might be the worst time, but long-term mentality, we know that, hey, these are probably some of the best times to buy some of the companies we are very bullish on. Again, I do want to say this mainly works on companies that are going to survive during any form of negativity that we may see in the upcoming months, and maybe not so well, maybe those companies that are not making money or don't have any form of positive cash flow or healthy balance sheet. The second tip and trick is one that I kind of covered a little bit in the first, and that's don't let emotions take over. And like I mentioned, emotions definitely play an important role when stock prices go down. For example, a company like NVIDIA, who was kind of peaked around the 300 levels. If you kind of purchase at those levels and now seeing the stock price at around $150, that downturn could have been brutal for you and emotions could take over. But I do believe emotions work both ways. When the market goes green, emotions can also kind of create some form of negativity events. The first is sometimes we believe that this could be just another dead cat bounce where stock prices might just go up for a few days and then drop back down. That is true until it isn't, right? And for me, again, for that long-term mentality, I'm not trying to time that. So yes, I understand that this could be another dead cat bounce, but by no means am I gonna sell any shares, because who knows, this might actually be the bottom. Again, no one knows, so it's very, very hard, and I'm not here trying to time the market. The second way that I believe emotion works negatively in green days is sometimes we believe that this is the bottom, and if we believe this is the bottom, sometimes we might overbuy over our comfort level. And I think that is the important part. Buying over your comfort level is a no-go for me. Like I said earlier on, I think buying at these price points is very, very important for the long term of things, but always do it in moderation with what you're comfortable with. For example, for me, I'm never gonna overbuy where if the stock market does drop even more, I'm gonna regret it, right? So always understand what that magic number is for you. The third kind of tip and trick that has helped me during this market is understand that the market doesn't really owe me anything, and it's pretty much like crazy ex-girlfriend, boyfriend, whatever, where it's completely volatile, right? The market one day could be super green, the other day could be super red. Again, I do just want to say that's the noise, and as long-term investors, we have to ignore that volatility, we have to ignore that noise, and kind of keep our mind focused in the long term of things. So always be prepared for anything. Even though we might be finishing on the green this week, it doesn't mean next week can't be red. So always be prepared for the best. Always make sure you control your emotions, and always make sure you have a plan to keep buying, or whatever your plan is individually as an investor. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.